Well, there's a lot going on in the relationship right now. You've got security issues like the North Korean missile test. You've got China flexing its muscles on maritime security. And of course, Japan wants to make sure on the economic front that it's got the strongest possible relationship with the United States. With President Trump's announcement of his withdrawal from TPP, Prime Minister Abe is looking to see what might come next. He's invested an enormous effort, enormous political capital in TPP, both getting it done and getting it through his parliament. It's been a key part of his economic strategy, and he has a strong interest in making sure that the rules of TPP continue to move forward in one form or another, with or without the United States.
You invested a lot of capital in that TPP too. What were the rules in terms of what it would mean for Japan, and what it would mean for our relationship in terms of a trade relationship with Japan?
Well, it would open up Japan's agricultural market to our exports, beef, pork, a whole range of products we're globally competitive in but haven't been able to get into Japan because of their protection. It would open up their manufacturing market for us, eliminating scores of non-tariff barriers that they have to our autos and our auto parts. And it would have set a set of rules for the region around intellectual property rights or disciplines on government-owned corporations. It would have made sure that there were strong labor and environmental protections throughout the region that are very much in the interest of both Japan and the United States.
What does Japan get out of the deal? You talk about all the markets that it would open up for us. Sounds like a good deal for us. Why would Japan be so eager to get this deal done?
Well, we are already a very open market. Our applied tariff, or our tax on imports, is less than 1.5%. So other countries already have access to the U.S. market. But what was in it for Japan and for many other countries is that they agreed with us that it was important to have high standard rules for the road for trade in the Asia-Pacific region. That at a time when China is putting forward an alternative model, having disciplines on state-owned corporations, or making sure that there's rules around the digital economy that allow the internet to remain open and free, making sure, again, that there are strong labor and environmental provisions, or that intellectual property rights are protected. Those are all things, interests that we share with Japan across the region, and work very closely with Japan to put in place through TPP.
But Michael, what we're now talking about are bilateral agreements. That the rub has been, at least the talk has been, that we get a raw deal when we sign these massive trade agreements, because it's kind of the lowest common denominator is what you wind up with. If we already have low tariffs and we want to get into their markets, how do we do this on a bilateral basis? Well,
that's a very good question. I think that by the way, that's a misreading of the actual negotiating dynamic around the Asia-Pacific. Because we are already open, and because we already have free trade agreements with half the TPP countries, the way we got other countries to raise their standards was to help them get access, for example, to Japan. They rode on our coattails to get into Japan, into some of these other markets. If you make this a series of bilateral agreements, you're going to lose some of that negotiating leverage. But the Trump administration has made it clear it prefers the bilateral approach. It's now set up an economic dialogue between the vice president and the deputy prime minister of Japan. And they will now have to sit down and figure out what is it they do that either builds on TPP or goes beyond TPP to address the issues between us.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.